the fundamental features and tools that are available which assist in trading automation and trade idea generation. If this is your first time seeing Prodigio, what Prodigio is it is the automated trading system offered exclusively by thinkorswim and TD Ameritrade. You can use Prodigio in order to create trade idea setups and to fully automate the trade execution on those setups. Additionally, Prodigio offers a suite of tools that run the gamut of trade automation, risk analysis, and kind of batch functions in order to manage aggregates of trades all at the same time. One of the simplest demonstrations of this is we have tools, for example, to liquidate all active positions in the portfolio at market. That's a simple batch function that Prodigio offers. But the suite of tools available from Prodigio can be yours as long as you request Prodigio activation. And the way you do that is by sending an email into support@thinkorswim.com with the subject line Prodigio activation. My name is Brian Wagner. I host these chats every week, every Wednesday at 11 o'clock Central and 12 o'clock Eastern, and we cover different topics every time. Some of the topics include Prodigio overview or introduction to the system. Some of them include trade ideas or tips and tricks in how to take advantage of the automation of the Prodigio platform. And some of them just kind of showcase new or upcoming features. So we always have something interesting to talk about, and the world of trade automation and robotic trading is always a very interesting world to play in. So that said, follow us on Twitter, twitter.com/wizardlab, and join us on the web at prodigiorts.net. Make sure to join us on the forums, and any questions, any quick questions you have about Prodigio or about trade strategies or setups, you can come into this chat room, the Prodigio chat, on the thinkorswim platform during the day, and there's usually someone there to help you. Any extended questions or questions about accounts, etc., send those questions into prodigio@thinkorswim.com. And without further ado, we're going to get into the subject of today's chat, which today I'm going to kind of review and possibly introduce a couple new features to everyone who may be seeing the platform for the first time, or if you've been using the platform, try to conjure up some familiar tips and techniques about how you can be taking advantage of this system. There's a lot of different angles you can take, especially with all the integrations the platform has tied in with ChartTrader Pro, Trade Optics, and of course Wizard Lab. So I want to start by talking about Wizard Lab, because Wizard Lab is really the heart and soul of what this platform is capable of doing. Everything in Prodigio is driven by a server-side architecture, and the advantages that gives you are that when you run robotic trading or robotic scanning using a server-side infrastructure, you take a middleman out of the equation. What I mean by this is there's a lot of systems that are set up that stream data to your computer. Right? For example, right now I'm streaming all these quotes into my computer here because I'm running Prodigio, and I've got this quotes panel showing me all the quotes that I'm requesting for my symbol list, etc. A lot of systems use this as the foundation for either chart trading, chart-driven trading, or somewhat automated trading themselves. And there's a fundamental issue with that. The issue is that you are subject to being connected all the time. Your computer has to be connected to the platform at all times, because the automated system, if it's driven by your computer, if it's not connected, it can't get any data to fire signals off of. And number two, it's subject to the speed of your internet connection. Even if you have a fiber optics connection, or say a T1 line or something like that, the server-side infrastructures that are set up at organizations such as the servers that host Prodigio are wired in much more tightly with the market. In other words, your trade strategy scanning and order placement and execution, they remove those parts out of the equation. Everything is driven server-side. And what that allows you to do is to take advantage of that infrastructure. And the speed of those networks is directly tied in with the speed of your order execution. And that's very important for trading automation. A lot of things that we have to do when we automate trades is we have to rapidly place change or shift orders. A perfect example of that are trailing stop orders. A trailing stop order is an order that moves with the price. And I'm sure everyone out there knows what a trailing stop order is, but it's a very simple concept. If I'm trading, for example, if I had bought the Qs on the open of the market, I might want to put an order that says keep a stop order 10 cents under the market price. And what that would do, as time moves on, you can follow my cursor here, as time moves on and as price moves up, the trailing stop would shift upwards. It would shift upwards. And then what would happen is when it stops shifting upwards, the price would come back down, and that would trigger my trailing stop order. Well, my point in discussing the trailing stop is that that is a server-side feature. And this is offered by pretty much every platform that you can find out there. But for example, just like when you place these orders on Thinkorswim, the brains on the Thinkorswim end are working that order for you constantly. And so that's the advantage of server-side infrastructure. You can take advantage of the speed of all those executions, and you don't have to relay all the information to the client. And in a sense, that is the essence of Prodigio. The robotic systems and engines that drive the calculations run on the server. So you no longer need to connect your platform to the internet, pay $1,000 a month for your data feed, and run a script on your computer, which is subject to all those problems. Everything available from Prodigio is entirely free for all existing Thinkorswim customers. So, we hope to keep you in the family and, keep you trading with us, and this is, one of the motivations for us to develop all of these tools. So, given the essence of Prodigio, the mechanism that makes all this work is Wizard Lab. And Wizard Lab is inspired by chart-driven trading. So the idea behind chart-driven trading is I look at a chart, and I'm just looking at the Qs right now, for example, and you create technical-driven events. Now, it doesn't have to be technically driven. It could be fundamentally driven, etc. But the idea is you're building a system that's going to perform an automated scan. And I can take a number of different approaches to this, but what I'm going to do just for demonstrative purposes, and I'm sure this is the most basic of the basic for a lot of you guys out there, but I actually want to change the color of this. Let's see. And let's make these a little thicker on the chart so I can illustrate. I am looking at two different speeds of moving averages. And probably the most rudimentary trading system that you could think of would be a moving average crossover system. So for example, if I were to take, this is often kind of like a very simple idea, and you would want to either use this idea as a part of your automated trading or build systems that are in this likeness but not necessarily only doing what I'm about to describe. Moving average crossover system, very simple, obviously. You have two different speeds of moving average on a chart. And this is just an average of the price data going back over a certain number of periods. So I've got actually this red. Let me brighten this up so it's a little easier to see. Give it a nice bright blue, actually. So I've got this bright blue or teal color, and I've got this yellow color. The yellow average looks back over the past 20 values. Specifically, they're the closing prices of these bars, but it just gives you the average. And it becomes a running average, and that's why it moves up and down, and it kind of follows the movement of price because it must be the average of the price. So it just gives you an estimation of the price movement of the stock. And the idea here is that if you look at two different speeds, for example, here I have a 3-period moving average. It's just the average price of 3 bars. That's all it is. You basically have this emergent concept of lag, right? So in other words, the concepts of speed and lag, they're kind of an emerging concept that comes from the idea of performing moving averages, and you can take advantage of this information. So for example, I could create a system that says when the fast moving average crosses the slow moving average, it means that price is moving against its average, and I could make a decision. So an automated trading system might, for example, go short or sell positions when the fast-moving average crosses the slow-moving average, or it might go long or cover short positions when it crosses back above. And you can see that this kind of works sometimes, and other times it doesn't. But the idea is you are creating a system which is crunching lots of numbers and looking for lots of data, and you're trying to interpret that in a way that makes sense according to your trading. And so the big question, how do I make sense of all this data? What should I be looking at? What makes sense and what does not make sense? And that's where Wizard Lab comes in. So technical analysis driven trading, which is mostly based on these technical analysis studies, are the tools that makes Wizard Lab work. And I want to give you an example of how this, the thinking behind Wizard Lab. Wizard Lab, inspired by chart-driven trading, is kind of like a scanning slash processing system. And an example of a strategy, here's an example of a rule, right, which is going to make some kind of decision about whether or not I should be trading the stocks that I'm analyzing. The way that you read this is, I can read this left to right, kind of top to bottom. In English, this is simply saying, tell me when 5-second bars, OHLC bars, the same things that you see on a chart, tell me when the ADX value of that over 3 periods crosses the 14-period ADX value. And when that happens, give me a signal. Now that's very similar to what I was doing with the moving averages, except I'm using a study called ADX. If I were to look at this on a chart, I could go down into the studies and I could put ADX on and I could put another one on, and I was actually looking for, it was 3 versus 14. So I could put 3 on my upper ADX and I could put 14 on my lower ADX, and I'm actually going to double click here just to give me some more real estate. What that rule is doing is it's taking these two ADXs and it's telling me when the values cross one another, just like they would cross on the chart with the moving averages. Now the interesting thing about Wizard Lab is just like in a scripting average, right? And yes, you can do offsets for these, by the way. If you want to offset one of these periods, like a moving average of 3 periods, if I put, say, a 3-period offset in here, you'll notice what that's going to do. That's going to shift. It's going to look like it shifts to the right. The reason why it looks like it shifts to the right is because at every point in time it's actually looking backwards in time by 3 periods. You can put an offset on the chart by editing the chart study, and the way that you would express that in Wizard Lab, we have an adapter called prev. Right, so prev, I could toggle this up to 3, and that's the same as doing a 3-period offset on the chart. So you can always use the prev operator to look at something in the past, to shift it by an offset. So for example, with ADX, ADX is a study that measures directional movement. Right, so it's a kind of hybrid between price movement and volatility. It's a very interesting study. When you do technical driven trading, it will become important to gain a familiarity with what the studies are doing and how they relate to price movements on a chart. And this is very important, especially if you've done technical analysis trading, especially if you're a day trader. Nowadays you probably can't live without some degree of chart-driven trading. It's important to gain a familiarity with some of these studies. You don't have to understand these studies in detail down to the math level. You really don't. But you have to know basically what they're trying to measure and what they're trying to do. And ADX is a great example because this is a study that it kind of looks at both price movement and it has kind of a volatility component built inside of it. And the way that you can interpret ADX, it's average directional, I believe index is what the X stands for. When price goes up, it's an oscillator that moves up. And when price moves down, the oscillator moves back down. And it tries to give a general sense for the directions of up moves to down moves. And it's very interesting because the way these studies work under the hood, they all give you a different view of the data. And I was alluding to this in a prior chat. You can think of all of these technical analysis studies as looking at the data from a different angle. They all have different formulas, right? So ADX is one study. Another one that you need to become familiar with is ATR. ATR is an average true range. And what an average true range measures is quite simply the size of the bar. And you can interpret that as volatility. Now, it has a history. It not only measures kind of like how big the bar is, it also takes gaps into consideration. That's why you see how there was a gap in price on the QQQ Power shares, right, overnight here. That gap shows up inside of the average true range. But look at what happens on the ADX. It doesn't really show up on the ADX. I mean, maybe a little bit because the price movement, it did kind of go up, and then it is a red bar, so it went down. But you can see that that gap is much more pronounced on the average true range than it is on the ADX. And the point is that this is looking at volatility and price movement from two different perspectives. ATR is focusing primarily on how big the bars are, because the assumption is that a big bar implies more volatility. And that makes sense if you think about it. And this is what Wells Wilder knew. When you look at these almost doji-esque bars here, that's a period of consolidation. And what happens is the average true range dips until something starts happening again and more players enter the market, more people end up trading it. The ATR will eventually go back up. Now this is a 14 period, so it looks back over quite a few number of bars, but it's measuring these heights to give you a perspective. And it's that perspective that you can use to take advantage of in automated or semi-automated trading. So the idea behind Wizard Lab is this is the kind of analysis that you can do and automate. And you can do this for any of the technical analysis studies in the Wizard Lab system. Wizard Lab has a wide array of studies out of box, and I'll just scan down through this list very quickly. These are the technical analysis studies. There's more studies than that. There's also pattern-based, but more importantly, there's basic operators. And the idea behind Wizard Lab is using this drag and drop user interface with a combination of pre-built technical analysis studies and a complete set of mathematical and logical operators. You can do anything that you would do in a scripting language in Wizard Lab. It takes a little getting used to. If you're a scripter, if you're a hardcore scripter, it takes a little bit of getting used to how you would translate a script into Wizard Lab. But if you're not a hardcore scripter, this gives you the edge because Wizard Lab is built to be intuitive. So in other words, what you would do is you would look at a chart, you would see what you would want to do, and then you would express what you want to do by literally connecting the dots. That's how this works. It's always a series of connecting outputs into inputs. It kind of suggests to you when something is okay. It wants to snap to this input. And when I let go, that connection is made, and it defines what's going to happen on the server. As I mentioned before, this is a server-side processing engine, and it's built to be a real-time engine. When you do automated trading, you want your signals to come in as soon as they happen. You don't want the signal to be looking at something from a prior day if you're doing day trading, for example, because once you miss the signal, you can't get into the game anymore. You have to buy in a timely fashion. You have to sell in a timely fashion. So the way Wizard Lab works is it's always feeding data through the system. Just like when you watch a quotes panel and you see data streaming into the system, you can think of this as a flow of data. And as software developers, as we do on our end, I'm the chief architect of the software, we're always thinking in terms of streaming data. And streaming data is all over the place. It goes into your phone, it goes into your television, especially now that we're all on the digital standard, and everything that you get off the internet and computers, it's all streaming information. So market data is an extreme case of that, where you have all this data streaming in, and one way to represent that is with OHLC candlesticks. And so these bars, they stream in. Data comes from the market and they create these bars. And I can zoom in on the price action on the Qs, and you see this bar, it's almost dancing around. And the reason why it's dancing around is because as trades come in, that affects the shape of the bar. So when people go and trade the forming bar, it causes it to go up, to go down, etc. And this bar will kind of dance around according to the trading activity. That's caused by this data stream. And it's a simple concept. Data flows in from the right. And then when you go to the left, you're looking into the past. And anytime you've looked at a chart like this, you know that if you scroll to the left, you're going backwards in time into the past. And what makes the technical analysis interesting is the behavior of the studies with time. Here's a beautiful example that I just kind of fell into. Here you have a moving average that, because of this very, very unusual activity at the end of October the 7th here, you have this very hard dip down, and then the next day it gaps up. Now, some of you guys out there are amazing gap traders, and what you can do with gaps is really, really impressive. What's interesting is that a lot of that can be automated, especially if you use these heuristics-based analysis. A heuristic is just something, it's like a rule of thumb. That's all it is. I would really like to hear what a gap trader would say about what happened between the 7th and the 10th on the Qs. I know it's very market-driven because this is the ETF, power shares on the NASDAQ, but that's a very interesting phenomenon that happened here. That manifests itself in the moving average, and it presents us with something that's interesting. These events we can interpret and analyze differently, and we can create a system that presents those events to us. And I'm going to talk about trade optics, which is what Prodigio Wizard Lab can do to present that information to you. But this data, as it happens in real time, it comes in from the right, and it scrolls in, and it pushes everything backwards to the left. The reason why I spent so much time explaining that is because that's how Wizard Lab works. Wizard Lab says data is going to be coming into the system because, again, this has to be a real-time scan, server-side, low latency on data that can send your orders in a timely manner. And the way that we draw this up in Wizard Lab, we literally draw this up, is we have a suite of tools called source data. And this source data defines data as it comes in through the system. Now, to begin with, most of the source data is chart-driven, so it's OHLC-driven. So you can kind of select your different intervals for trading. But if I look at, say, 1-minute bars, for example, I can drag out another OHLC study, set this to 1 minute, and what this does is this is a study which I dropped onto my rule canvas, and that study says I'm going to start with OHLC values. And then I'm going to do something with those. And that's the whole idea. It's just nothing more than saying start with something, start with the source data, and then what should the server do with that data? And the system will guide you in the direction of what makes sense versus what wouldn't make sense. So for example, OHLC, it's got a red color here. This is actually red in the output section here. It implies that the rule is not finished yet. And when I hover over, I can just drag my mouse and it starts drawing an arrow. And I can send the values of this OHLC into any study. Not only that, I can also use an adapter. If I scroll down to the bottom, I have this series of adapters. And the idea behind an adapter is it's just a simple way of looking at the data differently. Right? So, for example, an OHLC on a chart, that's these bars, right? And these bars, they always have an open, a high, a low, a close, and they also have a volume component. That's 5 different things inside of every bar. you can use an adapter to look at any one of those 5 things. So for example, if I, by default, the OHLC will use the close value. It's just like any chart package you have ever used. If you just put a study on a chart package, it will always run that study by processing the close values of the OHLC bars. Wizard Lab is no different. By default, it uses the close price. Now, you're free to use this close adapter, which just says, okay, use the close adapter, but you really don't need to. It's just in there for purposes of completion. But what makes adapters interesting is, let's say I want to run a study using only the high prices. I can go into my adapters and I can pull out the high, and the idea is I connect the output of the OHLC into a high adapter. Right? So this is really cool. This is just like, if you're, connecting plugs into outlets, and you have, 2 different ends. If you have, a male plug and a male plug, and you need to connect them, you need a female to female adapter. So an adapter is exactly like that. What this does is it says start with the OHLCs and then pull out the high price. So those high prices are what are then interpreted by whatever study I want to use. And then it becomes easy. If I go to my chart, right, you see how these moving average values, and I'll use the quick moving average, the cyan as an example. By default, this is running through the close prices. I'll show you how to edit this in ChartTrader Pro. You just click on the editing widget. You see this apply to. With apply to, now this is pretty standard of any chart package. You can change it. And this is the same concept as the adapter. Now watch what happens when I pick high. Now it looks totally different because it's running that average through the high prices. That's really important because now you can start doing things like find out what are the average highs of the bars. Then find out what are the average lows of the bars. Right? And maybe you could invent a study that looks at the differences between the average highs and the average lows. I don't even know, actually I don't know if that's a real study, but it could be. That's very interesting, don't you think? That would be measuring something that has some salient value. That's the power of Wizard Lab. To do exactly as I just said, I'll move quickly, right? But you could do that using the SMA study, which is a technical analysis study. And I scroll down here into SMA, and it doesn't matter the periods. This would be the average of the highs. Right? I could right-click, I could copy, I could paste this down here. Instead of a high adapter, I could use a low adapter. And if I wanted to take the difference of those two, that's a simple math operator to use a subtraction. And it's okay if you're not following this 100% right now. The idea is, and what you should get a sense of, is that you can do these things by just dragging and dropping and pointing things together, literally connecting the dots. What I did down here was I created a rule that looks at the moving average of the high prices, the moving average of the low prices, and I take the difference of those two. I can then do anything I want with this difference. I can take a moving average of that. I can do a linear regression, which is a very useful tool for technical analysis studies. I can compare this against the low or the high, and I can see things. I can say, okay, is the current low, is it below the average low, or is the current range of the bar outside of the current average spread, etc. Lots of things that you can do. And yes, you can combine volume with price and multiply things together. There's time filters. Right? There's a whole set of time filters. And actually, there's a couple questions that came up this week about time filters. Time always applies to kind of the clock. Time's always applying to what's going on right now. Now, if you get really sophisticated, there's another adapter called a time adapter that actually looks at the individual times of specific data time series. You really don't have to get into that until you get really sophisticated, but my point is you can start to see all of the things you can do with this system using just drag and drop. What you should be noticing is I'm not typing anything right now. You can probably hear my keystrokes if I type on the keyboard. I'm building these strategies with my mouse, and I'm not typing anything at all. Now, I mean, you can type certain things, like if I want to edit these periods, I can type in 100, etc. But everything is very simple, mouse driven. Drag and drop. We try to make it very intuitive because the idea behind Wizard Lab is that when you develop these strategies, you should be working with the strategy. And it's just like if you ever watch some of these movies where you got say Tom Cruise and he's manipulating the computer with his hands. The reason why these user interfaces are so important is because it takes away the how do I get it into the system from what am I actually trying to do with the system. And so Wizard Lab is inspired by chart-driven trading, and the way you work with it is I'm going to take all of my existing knowledge, everything that I do when I currently trade, or the things that I learn from getting into this domain, which are very simple, by the way. A lot of these studies are very simple, and probably 80% of everything you'll ever need to do can be learned in the first 10 studies of technical analysis. You need something that measures averages, something that measures volatility, something that measures price oscillations, something that compares things to what's been standard, and linear regression is a good tool to that. And you need something to kind of open the door into statistics a little bit, something like a Bollinger Band. That actually, when you use a Bollinger Band, you are using statistics, and you might not even know it. Bollinger Band is a very beautiful study developed by John Bollinger that uses standard deviations. You don't even have to know what that means. But what this is doing is a bunch of math nerds like myself, right, develop these studies. And I want to make this thicker. No, I'm actually, oh yeah, I've been changing the width of the middle line actually. So let me do the Bollinger up. Yeah, here we go, Bollinger Band. You can customize these to whatever you want. Here we go. The Bollinger Band study, it's a, yeah, now I go and delete it. It's a very beautiful study based on standard deviation, and it gives you a channel. And that channel is interpreted as the average oscillation of price movement with respect to a moving average. In other words, when something goes outside of 2 bands up and 2 bands down, something really significant has happened. So you see what happens here? It shows up, it manifests in the gap. This bar is outside of the upper Bollinger Band. Something significant definitely happened. And you can use this in your trading. Right? Look what happens today. When the price hits the upper Bollinger Band or becomes very close, and you can read these things very differently depending on how you want to interpret it. I'm just kind of pinching this out. It indicates time for a reversal. It gets close to the upper band, time for a reversal. It gets close to the lower band, time for a reversal. That is a characteristic that happens very naturally on the ETFs, because an ETF is a high volume stock which is tradable by a lot of different people, and it's more driven by the market masses than individual, I almost want to say, interest or hype on a stock. You know that can happen. When you look at, say, the individual stocks, let's say there's news, and let's say Pfizer comes out, with some great news, and they invented, some new drug or whatever, and it's very beneficial. All the reports are very good, all the testing is really great, and it's going to solve this medical problem. Oh, that's great. That's great. Great time to buy this stock in the morning. Because just by the news, it's just going to go up most likely. And your own judgment, your own rationale is going to be a large part of that. But the larger volume securities, they're less subject to the news. They're kind of more subject to, obviously, the economical news, etc. But what happens here makes a lot of sense, because you have a market. It kind of knows what the price level should be, and it's going to oscillate about that price level, and you can take advantage of this. Not only just to scalp intraday trades, but also to give yourself favorable entry points in your swing and investment trading. If I knew by 11 o'clock in the morning that I wanted to buy the Qs, I could study the movement on this, and if I knew that I wanted to buy it, I could make a decision by around 12:05 to pull the trigger, because I'm at the lower end of my Bollinger Band. you know, and that could be at 12.05, 12.10. If I pick a price around here that's about $56.91, that's a much more favorable fill to go long than at 57.12. You know, that's a 20 cent price improvement, and that could be substantial. So that's the philosophy of Wizard Lab. You can use technical analysis and you can build this system from left to right. You can go right to left. It really doesn't care. You know, the connections are made regardless. By applying the techniques of technical analysis and creating these rules inside of Wizard Lab. And so in a scripting language, if I were to try to create this calculation in a scripting language, that would actually be kind of difficult, because I'd have to have a lot of different variables. I would have to keep track of arrays, and I'd have to manage array indexes, and it just becomes a very messy thing to deal with. Wizard Lab was designed so that it takes all of that away, because 99.9% of the things that you need to do have already been programmed before by someone. And they've probably programmed it correctly. So for example, one of the things, if you work with a script, a lot of things they try to do is build in the offsets into the study, which is very important. But if you wanted to create, say, this lower branch on the study, you might have to track this moving average time series individually and compare it with that individual time series. And you run into a lot of problems, because what if this study was calculated, but this one hasn't been calculated yet? And that's something you have to think about if you're scripting. Wizard Lab takes care of all of that for you. You know, and if I want to get the index at index number 25, I have to make sure this is also index number 25, and that number 25 has a value, etc. Just messy stuff you don't want to have to deal with. You want to go with your knowledge, apply that knowledge, and build an automated system. Now, that said, I'm going to show you how you take advantage of trade optics. Right? So that's the idea behind building rules. And what does a rule do? That's the important point. When you create your strategy, and rules always have to end in logic. You always have to end with something. You want to say, find out when it's greater than something, when it's less than something, when things cross, etc. Let's run through some examples. Tell me when the volume is greater than twice its average volume. Right? So I said greater than twice its average volume. Or tell me when price moves outside of its Bollinger Band range. Or tell me when the moving averages cross over. Or tell me when the MACD histogram goes positive or negative. Here's a really nice study, which is, it's a study based on the concept of moving average crossovers, called MACD. And let's clean up some space here. MACD is a system of crossing moving averages, and it actually smooths out the differences between two different speeds of moving average. So there's some intelligence behind this, but the real gem of the MACD is this really pretty green and red histogram. A histogram is anything that looks like this. It's when you have vertical lines drawn on a chart. That's generally referred to as a histogram. And so the MACD histogram is the most important part of it. You look for things such as convergences and divergences. Right? So you see, like, the shape of this histogram, it gradually begins to trail off. Well, that's significant, and when it crosses below zero is significant. You can build systems that pick up on these things, and one of them is very simple. It's when it crosses below zero, when green becomes red. So what I'm doing when I'm saying that is I'm saying the MACD histogram crosses below zero. That crosses, when it happens, I want that to trigger and give me a signal. And it's that signal that a Wizard Lab rule gives to you. Right? So when I build this rule, everything ends in a signal. And I have to say what I want to do with those signals. So let's back up one more time. I open up, let's say, one of these rules. Right? Here's a lower Bollinger Band buy. Right? And let me read this to you to say what it's doing. It's actually using the Bollinger Band study. it's looking at the lower Bollinger Band, and it's saying, tell me when the low price, remember that's the tail of the OHLC bar, tell me when that low price crosses below the lower Bollinger Band. And what I'm going to do with this originally, this is a very basic rule, and I use it a lot for demonstration purposes because it fires a lot, especially on 1-minute bars. When the low price crosses below that lower band, it's going to fire a signal. And so when I save this, I hit save as, I give the rule a name. You should usually give it a description. This is just a note for yourself so that later on you can remember what you were thinking about associated with the rule. That saves that rule to your set of my rules. And you can chain these rules together, and that becomes very useful if you build bigger systems. Those my rules are what you use in Strategy Builder. And so what I did was I tabbed over to Step 2, Strategy Builder. And you'll notice that there's 4 steps. There's Step 1, Rule Builder, Step 2, Strategy Builder, Step 3, Backtest, Step 4, Deploy Strategy. These 4 steps you just follow as a sequential process in order to build something that uses Prodigio's Wizard Lab. A strategy is nothing more than combining rules together and saying what you should do when that rule triggers a signal. So, for example, I was looking at the study was called Brian Lower BB Buy. I can drag this out into the scanning rule. And a strategy has different parts. It's built according to how do I want a system to robotically trade something. Now, trade optics gives you the signals, and then it's a semi-automated system where you can elect to trade those the signals that you get after confirming. A robotic system is going to trade automatically, and there's advantages to both systems. The advantage to the optics signals is that it gives you an extra step of confirmation, and you can evaluate whether or not you want to take that position or not. However, there's time involved with taking that position. You have to study that chart, even if it only takes you 20 seconds. You have to look at it, make a decision, and then you have to go send the order. The advantage to the robotic system is that everything happens instantaneously. So if you create a system, and if that system is capable of finding a very nice opportunity to make the trade, that system can execute on the order of milliseconds. And that's significant, because you can't really look at a chart and make a decision in milliseconds. You know, maybe if you're a professional baseball player, you can make a decision in about 300 milliseconds, which is how long those guys have to make a decision about whether or not to swing the bat. But that's really hard, and it's very hard to make a living on that. So the strategy builder is oriented with respect to I want to combine rules together in a way that dictates how these signals should trade a position. Step 1 is adding in the scanning rule. The scanning rule is going to be the initial trigger that if it triggers, it's going to send an order to try to get in position. And Prodigio is built around the concept of getting in and out of position. So actually I can turn this on. I have a couple RTS strategies deployed. Notice I have like some variations of this upper BB. I named it Brian Upper BB with RSI short. And I have one with long, etc. You know, these are in here. I have a couple deployed so that when it finds the conditions, and as long as my risk settings are allowing them, remember this is very important, risk settings governs the robotic trading. This thing is going to start finding trades, and it's going to get into positions, start making trades. And actually it just got into a slew of positions. Notice how fast that was, actually. You didn't see those positions come in one by one. You saw them all come in one shot. That's because, well, see these strategies here. I have a couple EMA crossover strategies that are based on the 1 minute. These are very loose strategies based on some very loose risk parameters just to demonstrate what you can do possibly with this system. Now I have limits on this system. I have in here 18 positions. So according to my risk settings, it dices this up into 18 positions. But the point is, due to the server-side scanning, it can get into all those positions like that. That's the difference between robotic trading and the trade optics, which here's those same signals, those EMA crosses, coming into my signal queue. And I'm going to finish by talking with that, but How I put those together is I make a strategy by combining the rules that I had just built, and part of those rules are about getting into positions and getting out of positions. And actually my original point was that it's a position-driven system. So when I look at this portfolio view, it says I own Caterpillar, 119 shares of Caterpillar, and I can do things such as if I want to, if I want to sell, the 19 shares, and round off that position. I just sold 19 shares and I made that a nice round 100. It's position driven, so that when I sell, I can actually sell 100 now. When I sell that, the position will close and Caterpillar is no longer part of my portfolio. I no longer own it. It's a position driven system where I get into position and I get out of position. The strategy builder manages positions, and it's a very simple concept of getting into position and getting out of position. So initially the scanning rule triggers, it'll send an order, and I have a low resolution so I have to kind of shrink this over here, but it says, okay, send an order into buy, and you could specify go long, go short. I'm saying go long at market, right? Well, I could say go long at limit, and I could specify different parameters for my order. I can say I want to put an offset on my limit price. I want to take a look at, say, I'm going long, right? Let's say I want to put it at the ask price minus 1 penny. I can set those parameters using this definition of the strategy. And this is very important. It's driven by offsets because I deploy this strategy against a list of symbols that I want to scan. All of those instruments are going to be trading at different prices. So it's important to set up your strategy so that everything is done in terms of an offset. You can't say buy it at $300, right? Because maybe that makes sense for what was that? What's Caterpillar at? I haven't looked in a long time. It was a while ago at something like that, but it doesn't matter. Well, here's Baidu, right? Baidu's trading at $133 a share. I can't set up a strategy that says buy all the stocks at $133 a share because they're all trading at different prices. So the intelligent way to apply the same logic to all of these symbols is you set offsets. So you could send limit orders. But as I've been telling everybody, the thinkorswim routing is very efficient, and you can really trust the market orders. They do a fantastic job with those market orders. So I usually like putting in orders at market, especially if I can just scalp in and out. But you can trigger based on limit prices, which prevents you from hitting the other side of the market, the bid or the ask, etc. You create a strategy by creating your scanning rule, and then you can create a series of management rules. And there's two sides to this. You can create a rule that's going to add more onto the position. I usually tend to avoid that. This is a more advanced topic, and it's something that we've covered in the past. You can create rules that do strategy confirmation. So for example, you find the crossover, but you want another crossover to happen. You can set that up by putting a rule in the add to position. But usually when I introduce people to the system, I focus on the closing position management. And what this does is, see this slider here? I have another set of rules for my position management. The most important one is this order, because I can say set a trailing stop to go at 10 cents under the price. And every time the robotic system puts this strategy on, it's going to automatically place a trailing stop underneath that long position 10 cents under the entry point. And of course that price would trail up, but I can specify these parameters here. I can do this for orders. I can do it for rules as well. If I want, let's say, opposite logic, right? If I want opposite logic for this Brian lower Bollinger Band buy, I can go and find a Brian upper Bollinger Band sell. Right? This is another rule that I had created in the past, and I could drag this out, and I could put this down here. And if this rule triggers, if this fires a signal, it's going to send another order in to get out of position. Right? So for example, Bollinger Bands are a good one to reverse this, right? Because I was actually talking with someone about this the other day. Be careful if you have rules that are inverses of one another. A Bollinger Band is a rule that's very prime for things that reverse. If price crosses below the lower band, it's not going to cross above the upper Bollinger Band unless something significant happens. Usually. Unless things are extremely volatile, but then you could include volatility as a filter in your rule. Be careful if you look for price movements, especially if you use forming bar. This is a gotcha. This is a gotcha. If you have a system that looks at moving average crossovers, what may happen, and don't worry about forming bar on, off, that's a topic for another chat. If you look at a moving average crossover, it's highly likely that that moving average crossover can cross back over itself in a very, very short amount of time. And especially if you use this forming bar, which kind of performs evaluations as this bar dances around, you can get these kind of whipsaws. And a lot of you may have heard the term whipsaws before, especially if you have evaluated systems of crossing averages. Sometimes it shows up in the MACD actually, so let me see. Here you go. You see what happens here on the MACD? When this orange line, let me make this a little bit thicker so that you can see it. That orange line is the MACD line. And so let me make that thicker. And then there's the MACD signal line. That's the red line. So I can make that thicker. And let me double click again here, and I can zoom in. You see how the orange line, it crosses up above this red? Let me zoom in a little bit to make that stand out a little more. This orange crosses above the red, it crosses back below. Then it crosses above the red, it crosses back below. This is known in technical analysis as a whipsaw. And whipsaws are, they're kind of a, they're an interesting phenomenon that you need to try to avoid in technical driven trading. One way to avoid a whipsaw is by giving yourselves a buffer. Right? So you could say things like, let the moving average cross above the other moving average plus 0.5%, right? Or minus 0.5%. And you got to crunch the numbers to get the percent right, but usually you can figure this out using just a simple calculator. Be careful of this. It's really easy to get rid of this, and we've covered it before, and we can kind of cover it again in another chat, but I just want to wrap up the idea about what you do with Wizard Lab. So you can create rules that are opposites of one another, but be careful of those whipsaws. They can happen. That's a gotcha. Wizard Lab has a backtesting system, and the backtesting system is very interesting because what you can do is you can run this against a simulated portfolio. The backtest it depends on your duration of the backtest or the size of the rule itself, but you run a backtest and it gives you various equity curves and statistics, etc. You can take a look at the results of the trading, and it tries to show you where this trading happened on the chart. So you see we've actually got two positions intraday here on this daily chart. I can run this down to something like a 15-minute chart, and I should be able to scroll back and see this is kind of getting in and out. But you can analyze what's happening inside of your rule by running it through backtest. It's got a simulated portfolio. If you hit this editor, you can specify various risk parameter settings, and you can kind of tweak the system, and you can just play with it for 5 minutes and you'll get the hang of it. It's very straightforward. But you can restrict buying power and drawdown amounts, etc. I covered this information in a chat maybe about 2 or 3 chats ago. But yeah, you can run the backtest. It's very simple. It also has a raw mode option. The raw mode option is very important because the raw mode will show you all of your signals without being restricted to the parameters of the simulated portfolio. In other words, the simulated portfolio gives you realistic limits. Right? So in other words, if I have, I believe this was what, $200,000 of buying power, the simulated portfolio will not show me all of the signals because at some point it might max out that buying power. Well, the raw mode ignores that, and it basically assumes that you have infinite buying power. That's important when you're designing your system because you want to see when your signals trigger according to the logic that you made. So it's something that's very useful. It's kind of like a raw debugging tool, and that's why we call it raw mode. Well, finally, when you have your strategy kind of worked out, there's two ways to deploy it, like I was discussing before: RTS strategies, and there's trade optics. Now, these panels are built basically the same. The idea is very simple. You just pick your strategy, you check it off, and you can pick your symbol list. These symbol lists, by the way, you can edit these symbol lists by going to the quotes panel. And if it's your own list that you have loaded, you can edit the list right from within the quotes panel. So I have, let's see here, I have one called My List that doesn't have anything in it. You know, I can just put, I really like the ETFs a lot because of the high volume, and they're very prime candidates for doing technical trading. So, you know, I kind of like trading these, especially with trading automation. And there's a whole, you know, gamut of ETFs, and you know, there's the sector spiders and all this kind of stuff. You can build up your symbol list, and this list, which you can give it a name, you can edit it from here. That's what you use when you deploy under trade optics or RTS strategies. Which brings me to the final point. Trade optics. This is something that you can use right away with zero risk. That's what's so beautiful about the trade optics. The RTS strategies that I was demonstrating before, this is the optimal, maximum, best way that you can take advantage of the system. However, you can start with zero risk and use the system by looking at trade optics, because all trade optics does is it presents to you a queue of signals for your strategies that you have deployed as they come into the system. So for example, here's a signal that the system just got, and in a couple seconds I'm actually going to get a new batch of symbols because they're based off 1 minute bars. So you see the okay, here they come in, you know. So I got 3 more triggers on different stocks. They're going to come into your queue, and this is sorted by time right now. You can change this, by the way. You can click up here and you can change these things. You can also control click. You see what I'm doing here? I'm control clicking, and it might be a little hard for you to see, but it's sorting, let me break this down, first by time and second by strategy. This is pretty cool because I could do the opposite. I could sort first by strategy and then by time, and you see it would kind of group everything together. So now it's not linear with time, but it's linear with respect to the strategy. So pretty cool. So I can click this button here, and it says here is my EMA cross according to the strategies that I had set up on my Wizard Lab. And mind you, these parameters can become pretty sophisticated. And it says, I found a signal at this time which said to go long. And this may or may not be a good time to go long in the stock. It's just based on the simple rule that I had set up for EMA cross, which again, it's not very sophisticated. It was just built for demonstrative purposes. But I can see that on the chart, and what it's done is it's auto-loaded this into my order entry. So I clicked on BAX, and it loaded by 100 shares into the system. So if I'm looking at trade optics, as I get signals coming into the system, I can just click Load AEP. If I like it, I can click Send, and I'm in position. I'm long 100 shares that quickly of AEP, and it's just like that. And in I think it was either the last chat or the chat before, we talked in depth about Chart Trader Pro, but it has auto send features. So I can then click on auto send. Yes, I want to enter auto send mode, and I could put trailing stop orders, or I'm sorry, stop orders into sell. Right, and I click here, and you see I've got that magenta line there. Now remember, this is hot. When the cursor is green, the order entry is hot. I can remove it, and now I've got a stop order underneath the CMA cross. And if I want to change it, I just drag it, and I change it, and the order is changed. So that's pretty cool how everything is linked together. And you see that even though this is semi-automation, I was able to look at my trade optics with no risk, load the symbol in. Now it's ready, right? I can confirm, say, yes, I like this, no, I don't like this. You could look at this a number of ways. You could say, I like this because it looks like it's beginning an uptrend, and it just pulled back on what may be an uptrend. I might want to check my market indices, you know, just want to check at what's going on in the market. It looks like, it's a little bit bullish right now. This might be a good play. I don't know. That's based on my judgment. But I'm using the automation of the system in a semi-automated fashion. Everything is hot loaded and ready to go, and when I want to buy it, I just send the order, and I'm getting in. And I was actually in too many positions. That order got rejected. You see, I'm in too many positions. I didn't have enough buying power for that order. So what I could do is, well, I could disable my RTS trading. Right? Make sure you enable it. If you're going to use RTS trading, make sure you enable this. There's also an expiration date in the RTS strategies panel, by the way. You can leave this running for an extended period of time. We put an expiration date on here because if you want to go and take a Vegas vacation or something like that, and you don't feel like managing your trades for a week, you might want to have this expire on Monday. Right? So that's something cool that you can do. You might want to have this expire on Monday. Then you don't have to worry about the system putting on trades while you're out relaxing and having fun. I want to free up some buying power. Right? So I exited all those positions at market. Go back into trade optics. Now I'm hot. I'm in the game again. Amgen. Right? For whatever reason, I like it. Auto loaded. Go in at market send. Boom. I'm long Amgen. Right? Maybe I didn't like that, so I go out, I close it, go back into the trade optics queue. I know I'm going to get another set of signals in, well, this is going to come in 30 seconds. So let's say PM, right? Let's say I want to get into PM, but look at this lower volume, right? So I don't want to go in at market. I want to change this to limit, right? Change the limit. Order price is pegged to the current offer, right? So I want to step in front of the offer. I want to go halfway, send the order, fills right away, because somebody came across the other side of the market to fill this order. I sent the order in at limit, gave myself a 1 penny price advantage, and I did this by taking advantage of the server-side execution. It's all very rapid, very fast, and just analyzing trade optics is a zero-risk system. So that's pretty cool. I like trade optics a lot. I like RTS strategies even better. But if you just want to dip your toe in the water, you can start with the trade optics and see what is capable inside the system, and it's all pretty cool. So I hope that I've given you an introduction today on Prodigio and Wizard Lab. I hope I've given you a couple more tips for people who, some of you guys have been watching for a very long time. A couple things I hope you took to heart, such as the whipsaws. If you're a more advanced user, think about those whipsaws very seriously, because you can really create some interesting filters to avoid those whipsaws, and they don't have to be so sophisticated. You can use percentage-based filters, etc. You can use volatility-based filters, lots of things. This chat will be archived as it is every week. All these chats are archived on our home on the web, prodigiorts.net. And I want to thank everyone for joining me today. I hope you found today's chat to be very enlightening, very useful, and I hope you can take these concepts, apply them, and be very profitable. As always, my name is Brian Wagner, and I'm the Chief Architect of Prodigio RTS. Our development team, based out of the sunny city of Philadelphia, is always working very hard to provide you with the newest and latest in trading automation and trade idea generation tools. And so I hope that you continue to follow us on Twitter, twitter.com/wizardlab, and join us here every week in the Prodigio chat on the Thinkorswim trading platform, 11 o'clock Central, 12 o'clock Eastern. That said, I hope you come back next week. And next week we'll talk about some more interesting things, maybe do some strategy development. So as always, thanks everybody. Have a great week and great trading. Take care.